5 years ago, this Sunday, Lehman Brothers made the largest bankruptcy filing in American history. It's considered to be the start of the 2008 financial crisis. The Dow Jones Industrial Average quickly lost half of its value. But today, the Dow is higher than before Lehman went broke. Business journalist and author Bill Cohan spent 17 years working on Wall Street. He joins us this morning. Welcome.
Morning, Charlie.
So 5 years after, what's the assessment of Wall Street?
Well, I mean, as you say, the stock market has never been higher. Profits on Wall Street are as high as they've ever been. Employment is down on Wall Street, and probably individual bankers and traders are making less than they were before, but it's still more than anybody else in America, just about. So I think things are back pretty well on Wall Street. Not so much Main Street, but on Wall Street.
So is there a chance of another crash like 2008?
Nora, I think there's always a chance of another crash because, basically human nature is human nature, and nothing in the Dodd-Frank regulations or law or any of the other regulations being written are changing human nature, which is that people do what they're rewarded to do.
But it was the mortgage markets, it was these complex financial deals and bundling that led to the crash in 2008. Are you seeing any warning signals now?
Well, I mean, not in the mortgage market because we've learned that lesson, but I think the Fed's expansion of its balance sheet, not to get too technical, from $800 million to something like $3 trillion by buying a bunch of these securities poses a threat as they try to unwind that. You've already seen some jitteriness in the markets as a result of that. But, you never know where the next time bomb is going to come from on Wall Street.
Or the next bubble might come.
Or the next bubble.
What's the real difference in terms of Wall Street and where it is and Main Street and where it is?
Charlie, Wall Street has always figured out a way to make money and take its share of the pie, a disproportionate portion of the pie. It provides a very valuable service to America and the world. There's no question about that. But while the rest of America is suffering with high unemployment and inability to get mortgages and inability to refinance homes or buy homes, Wall Street is sort of partying like it's 1999 again.
How are they partying like it's 1999 again?
I mean, there was this incredible article in the Wall Street, in the New York Times a couple of weeks ago about, life in the Hamptons, about how people are once again buying $3 to $6 million homes. They can't even keep them in stock. $30,000 bottles of Dom Perignon are flying out the door. Porsches are, flying out the door. So, I mean, people on Wall Street are rocking and rolling again. It's just the way it is. They were bailed out by Washington, and they're now getting the benefit of that. Unfortunately, it's not trickling down to the rest of America.
Would they be bailed out by Washington again if that happened?
Charlie, they have, in the Dodd-Frank provision, there's this unwind capability. I think, despite all the unwind capability and the logic that they put in those laws, if there's trouble again, they're not going to let a Goldman Sachs go down, and everybody knows that.
Thanks,
and
Bill.
Thank you, Bill. But the interesting thing is that portions of Dodd-Frank have not been enacted.
No, not even close. There's still lots of regulations to be written.